It's a worldwide social networking site which links professionals to potential jobs. And it seems investors couldn't wait to snap up a piece of it. Shares in LinkedIn soared to more than double their initial offering price when they made their public trading debut today, pushing the company's market value to more than $10 billion, as our technology correspondent Benjamin Cohen now reports.
Remember these? Old-fashioned job fairs where candidates thrust fistfuls of CVs to potential employers. It all looks, well, just a little bit dated. LinkedIn is a website that replicates the jobs fair and networking events online. So my profile on LinkedIn is a little bit like Facebook, but instead of listing all my likes and photographs of me out on the town, I've listed all the places that I've worked. And I can add colleagues that I've worked with too. So I'm going to add Jeff, who's just been appointed the new technology producer. So I'm going to look him up and ask his permission for him to be my LinkedIn connection. If he says yes, then I can send him messages and we can do all sorts of other things as well. But say I didn't actually know him and actually was maybe trying to recruit him, I can pay LinkedIn to send him a message from me on my behalf. LinkedIn is the first of the global social networking sites to have made it onto the stock market. Its fortunes will have a direct effect on how the markets will react to Facebook, Twitter, and all the other social giants. In January, Goldman Sachs valued Facebook at $50 billion. Now shareholders say the company is worth $80 billion, around 80 times its believed profits. Twitter, meanwhile, is losing money, but it's understood to be worth around $10 billion. When the bell rang today and LinkedIn floated on the stock market, it was valued at $4 billion. Within 2 hours, the company was worth $10 billion. But just 2 weeks ago, China's social network RenRen floated. Over the last fortnight, it's almost halved in value. So are we at the start of a social networking-fueled stock market bubble?
At the moment, clearly, people are talking about projections of earnings in 10 or 20 years' time in order to make the kind of valuations that they're ascribing to some of these companies.
But those who lived through the last dot-com bubble and crash say this time it's different.
Going back to the dot-com boom in 2000, what we saw that was different is that we were still, many of us, on dial-up broadband. There were far fewer users, and there wasn't this network of people really making money, and the obvious ways of making money through advertising on the internet and e-commerce was much smaller than it was today.
Investors are desperate to have a piece of the social web, and as the only global social networking company publicly traded, LinkedIn is the only game in town, causing its value to soar. But when the likes of Facebook eventually join the stock market, will shares in the much smaller LinkedIn seem quite so attractive?